talk about TICs. So what is a TIC?
So a TIC is a property that is, you get a percentage of the whole building, and there is, there's still a HOA, and but you get a percentage of the whole building.
Yeah, basically you have the exclusive right to live in the unit, and let's assume we bought this unit. And how many units are there in this building?
There is 6.
There's six, right. I don't actually own this unit. I have the exclusive right to live in this unit or to rent this unit out as per the HOA rules. I own a percentage of the whole building, so fractional ownership. This is a concept that I think is more and more prevalent in San Francisco. And as an investor, I see this as an opportunity because TICs tend to be priced lower than their counterparts. I don't know, I think about 20% lower, perhaps, would you say? But as an investor, your purchase price is a lot less. There are some liabilities, of course, in that if one of the other occupants of this building doesn't keep up with their rent or there are damages to the building, then you're liable.
Right.
What do you think about that risk when investing in a TIC or living in a TIC?
I think it's still a good investment. Yeah. The advantages still outweigh the liabilities.
Exactly. It's almost like buying a stock. Bad news comes out, often the market will price in the bad news, and I do believe that 20% discount from what the TIC is pricing in some of the risk. The other reason I think the TICs are lower is because it's harder to get a mortgage.
Right.
Which obviously does preclude a lot of the investors who are trying to enter the market to get a mortgage on a TIC, whether you're an owner-occupant, first-time buyer, or you're an investor. If you're relying on a mortgage, it will be more difficult. It's possible. There are lenders out there. We didn't want to deal with that headache at this price range. We just put the cash down. I also looked at this as a very safe investment. We're talking about prime real estate in the San Francisco neighborhood, Pac Heights here, and the other one that we have.
Pac Heights and Soma,
that
which
was
is
rented?
Close, yeah.
That was already rented and furnished already.
Right.
Yeah. So there is appreciation, of course, that can happen, but I also looked at it as diversifying my real estate portfolio and taking money out of bonds and putting it into a real estate property that generates, a 5% cap rate. I don't have safe, secure, stable bonds that generate that type of cap rate or that type of return. So yeah, TIC is a model that I encourage people to research. This is a model that I think can work very well. And I think TICs are good also if you want to be a first-time owner-occupant and live in a place like this. I think one good idea is you live in a place like this 9 months out of the year, and then you have am I correct? You have the right to rent this 3 months, and you can also go lower than 30 days.
Right. So,
or does the HOA not allow you to do that?
So you'd have to check with each HOA, but many of these properties it's either TIC or condos that don't have anything in their HOA rules, and they say that they can do it under 30 days. You can go to the City Hall and you can get the certificate. I had a woman over, she has a very nice property in North Beach, and it was a condo actually, but she rented it, she lived in it 9 months out of the year, and she rented it out up to 3 months, and she got a lot per night. So you can do that under 30 days.